Leandra Lederman. I'm the William W. Oliver Professor of Tax Law at Indiana University Maurer School of Law. Welcome, everyone, to the first session of the 2021 IU Maurer School of Law Tax Policy Colloquium. It's great to see so many people here. I do know some of you from the Indiana Leeds Summer Tax Workshop this summer, which Dr. Leopoldo Parada and I co-hosted. So it's great to see people back. Let me go ahead and introduce our guest, my friend, Dr. Leopoldo Parada. He's a lecturer in tax law at the University of Leeds School of Law in the United Kingdom. And prior to joining the University of Leeds, he was a visiting professor of international and European tax law at the University of Turin in Italy, a postdoctoral researcher at the International Bureau of Fiscal Documentation, IBFD, in Amsterdam, and a research associate at the Max Planck Institute for Tax Law and Public Finance in Munich. In the past, he also practiced full-time as an attorney at law and tax advisor in Chile, Brazil, and the United States. Dr. Parada holds a JD, an LLM in international taxation, and a PhD in law. His research focuses primarily on the international implications of base erosion and profit shifting, tax avoidance and corporate income taxation, the application of double tax conventions, and the tax implications of digitalization in the economy. And in October 2020, he was listed in the Tax Coup 35 Leaders of the Future in Taxation list. And today he's going to be presenting his talk on full taxation, the single tax emperor's new clothes. So with that, take it away, Leopoldo.
Thank you very much, Leandra, and good morning, everyone. And thank you very much for having me here. Actually, it's a real pleasure for me to kick off the series, particularly because the lineup is quite amazing. So I feel very, very honored to be the first one presenting today. So having said that, I'm going to share my screen. I hope you can see the slides. Yes, excellent. Okay, so today, so the idea is to talk about this paper, which is entitled Full Taxation, the Single Tax Emperor New Clothes. So let me tell you a bit about, let's say, the motivations of this paper, why I came with this idea. And basically, it's because recently in the tax literature, in the international tax literature, some commentators, some good friends as well, as Professor Mason and other commentators, has been arguing that the OECD base erosion and profit shifting project actually reflects and effectuates this concept of full taxation, which is a sort of an international tax norm that would suggest that all of a company's income should be taxed in places where it has real business activities. I do agree that this is a very seductive idea, but still is very inconsistent conceptually speaking, because basically full taxation is not giving any answers as regards of where taxation should occur or who should finally be taxed. But also in putting forward the idea that the concept is quite over-inclusive and instrumentalist, because it serves the only purpose to justify certain coordinated provisions was rationale, is no other than avoiding a completed sense of taxation in cross-border transactions. This approach, which appears to be a very innocent approach, in my perspective, is not only in principle, because it's setting an idea that taxation can happen somewhere, no matter where, or a sort of idea of taxation for the sake of taxation, completely undivorced from a distributed rule. But also I think it is quite risky from the perspective of countries that they are wishing to attract real economic activities, incidentally also stigmatizing the concept of double non-taxation permanently. So the paper is a normative criticism, right? So on the concept of full taxation, and also tries to raise some very few ideas why this should not be taken into consideration also as an international tax norm in the strict sense. But before speaking about full taxation, I want to get one step back and talk about single taxation. So the idea of single taxation, which is quite simple, that in any cross-border transaction, income should be taxed at least once, but no more than once. And I know that today we have also the honor to have here Professor Ruben Avellona, who was the creator of this idea of the single tax principle, what he calls a single tax principle. And the idea is quite interesting because it works very well in a sort of a closed, systematic idea of the international tax system. On one hand, it prevents the appearance of double taxation. On the other hand, it prevents cases of double non-taxation. However, it is at the same time quite inconsistent. And why do I say this? Because basically, every time that one side, we try to enforce one side of the principle, which is, for example, the prevention of double taxation, we end up creating situations of double non-taxation. In the inverse, we have as well that every time that we pursue the aim of avoiding or preventing double non-taxation, we end up with situations of double taxation. A very simple example. Think about the exemption system to relieve double taxation. If we apply the exemption system as in a pure perspective, the exemption system is not looking at how much taxes were paid abroad, but simply to exempt that foreign income for domestic tax purposes, right? So it might happen that with the aim of preventing double taxation, we end up creating a situation in which we exempt income that was not taxed abroad. So a situation of double non-taxation. In the other way around, it might also happen. And it actually is one of the characteristics that we see in the OECD base erosion and profit shifting project, which is this tendency to prevent situations of double non-taxation, but with the risk of creating new situations of double taxation. The anti-hybrid rules are a good example of that. Generally speaking, every time that we have a disparity in characterization of entities or financial instruments, so for example, a financial instrument, that a payment that is treated as debt in the country of the payer and as equity in the country of the payee, it will generate a deduction without a corresponding inclusion of income, which can be translated as double non-taxation. So what is proposed by the OECD there is actually to deny the deduction in the country of the payer if income is not included in the country of the payee, or as a reactionary rule to tax what should be in principle exempted in the country of the payee. That sounds pretty good and actually solves the outcome of double non-taxation, but there are elements that if we put into the analysis immediately can bring us to a different result. For example, if we consider a simple mismatch in the inclusion of income. So we have the denial of a deduction 1 year without the inclusion of income, but the inclusion of income doesn't happen because it simply will be included in the next year. So in the end of the day, what we will have is that if we take those 2 calendar years together, a situation of economic double taxation. So again, we are, with the aim of preventing double non-taxation, creating potentially a situation of double taxation. And this is the secularity in which I try to criticize the idea of single taxation that goes all around. What is the takeaway of this? Basically, that there is a sort of frustration among academics and the international tax community as regards how to explain these 2 concepts, double taxation and double non-taxation. And first, and it can be explained quite simple. Double taxation we start focusing a lot into the question of how much taxes should be applied, while the reasonable question should be, from an economic perspective, what is the final burden of tax? How much taxes I pay? I put example in the paper that it really doesn't matter, or shouldn't matter, from an economic perspective, if you're taxed once at a 30% rate or 30 times at a 1% rate. And that, of course, create the situation that in one case we have multiple taxation or double taxation, in the other case we don't have it. But economically speaking, it should be relevant. The same situation we have with double non-taxation. Because double non-taxation, if we understand that that's exactly the opposite of double taxation, so the complete absence of taxation because countries, they decide not to exercise the sovereign right to tax, doesn't explain other similar phenomena like very low taxation, too low taxation. That is not, in principle, double non-taxation. So it is not surprising for me that in this whole debate, we have policymakers, we have NGOs, we have academics that they have contributed certain elements that they confuse even more the understanding of the concept. So we have concepts like fairness, justice, distinctions between intended and unintended double non-taxation, the very slippery concept of aggressive tax planning, which I still don't understand what it is about. But if we think about it, we take one step back and we think about double non-taxation as an outcome. So putting aside all the connotations, the illegal or abusive connotations, the question we should raise is actually the same that the one we raise for cases of double taxation. Why we should care about it? There are situations in which double non-taxation is indeed a desirable result. So if a person is receiving royalties paid from another country, and the country where this person is a resident simply decides not to tax that, from an economic perspective, that is actually entirely desirable. We can go further discussing about that during the Q&A later, but still, the frustration of the concept of double taxation, double non-taxation, bring us to this idea of single taxation, and most properly now to full taxation. So going into the core of the paper. So full taxation, which is this idea that all of a company's income should be taxed in places where it has its real business activities, appears to be a less precise concept and more intuitive than simply speaking about double non-taxation, right? Because it includes a series of other concepts. For example, it includes everything what smells to double non-taxation: prevention of profit shifting, closing loopholes, aggressive tax planning, and is indeed less precise than to simply say the complete absence of taxation. So from a normative perspective, I see basically three main problems related to this concept. And I should clarify at this point that when I refer here to the indeterminism, the over-inclusiveness, and the instrumentalist idea behind full taxation, doesn't mean that this characteristic cannot be present in the international tax provision. So sometimes there are norms that they are indeterminate and over-inclusive, and that's not necessarily a problem. So this is just attributed exclusively to the concept of full taxation. Okay, so let me refer first to the indeterminate nature of the concept. So unfortunately, full taxation doesn't answer a more fundamental question that comes a bit before, which is where to tax. Where to tax and at what rate, on what base are we going to tax? And I know that we could take some, let's say, hints and try to figure out, well, if we don't like taxation very close to zero or 0%, so whatever is over that could be a good rate. Perhaps a good tax base should be something, you know, close to financial accounting income, which comes with their own problematics. But the answer is still not about where we should tax. Actually, full taxation is simply telling us, when we ask ourselves, where should we tax, is basically being answered as anywhere. It really doesn't matter where we tax. The point is we need to tax somewhere. And this is problematic. This is problematic because it implies that countries may start taxing without a clear distributed rule, moving around the inconsistencies of single taxation, which is that taxing multiple times what has not been sufficiently taxed, or not taxing at all with the aim of avoiding multiple taxation, right? What could be the final aim of that, or how I see it as a real international tax chaos? Because the whole debate about taxing without previously having a clear distributed rule can bring us to a sort of understanding of taxation, because of we need to tax no matter where or how, but we need to tax, which can be, by the way, a very good justification for countries today imposing a digital services tax. We need to tax because income remains untaxed, and that's the end of the story. We shouldn't even care about agreeing globally on a distributed rule if we are going to follow this idea of full taxation also as a sort of distributed rule. The other problematic I see is referred with the over-inclusiveness of the concept. So I have mentioned already that the concept of full taxation is not only about double non-taxation, also includes the prevention of profit shifting, tax evasion, tax avoidance, loopholes, aggressive tax planning. The question is this negative or counterproductive in absolute terms? I don't think so. I recognize that any theoretical construction actually start, trying to conceive, to go as broad as possible. But I see, however, a couple of issues here. One is the risk of mixing up legal terms, ultimately bringing more uncertainty. Let me give you an example. So some years ago, the double tax conventions were modified in order to include the reference to the prevention of tax evasion and tax avoidance. And a good question there could be, well, what does that mean? Does it mean that now treaties now prevent also the appearance of double non-taxation or taxation less than full? And the answer, in my perspective, is no. That what happened with that inclusion, which is not an example that I'm just putting to you just because it's because commentators have said that. It simply confirms that double non-taxation was never a tax treaty issue, but it might become a treaty issue when treaties are abused or to achieve, artificially this outcome. So put it in other words, when double non-taxation is the result of tax evasion or tax avoidance, which, by the way, is in accordance with the BEPS mandate. If you get back to the OECD BEPS report, the main premise was that no or low taxation is not per se a cause of concern, but only when it's associated to artificial practices. The other problem I see with the over-inclusiveness of the concept is because full taxation includes terms that use double non-taxation as a proxy for abusive practices. So someone could conclude a priori that non-full taxation is equivalent to abuse. A very good example of this is this very unpalatable concept of aggressive tax planning. I don't know how to explain aggressive tax planning today, but I took this definition from the European Commission recommendation on aggressive tax planning that says that aggressive tax planning is taking advantages of the technicalities of a tax system or the mismatches between two or more systems for the purpose of reducing liability. Therefore, any transaction with or without economic substance that achieve double non-taxation may be aggressive. Now, if full taxation also includes the prevention of aggressive tax planning, it is easy to conclude that a transaction that they don't achieve full taxation can also be considered aggressive, whatever aggressive finally means. In the long term, we have a more powerful consequence of this, which is that anti-abuse measures can start using full taxation as a sort of a presumption, as it happens with all the anti-abuse measures, right? So we have anti-abuse measures like interest limitation rules that they presume that a certain amount of deductibility of interest over a certain threshold, is equivalent, to a presumption of an abusive practice. So they target that. And that's not a problem per se, but when the presumption it cannot be refuted, it becomes an issue. And I see that trying to refute the presumption of full taxation is almost impossible. So we can get back to this in the debate. And of course, it goes beyond of what I'm trying to say in this paper, more into a theory of anti-avoidance. But it's something that we should not avoid. The third problem that I see with the concept of full taxation is the instrumentalism that embodied the whole notion. Because the premise for me is simply a very good attempt to justify provisions under which if one country does not impose taxation, another country automatically pulls the trigger and does it without any principle guidance that truly support this pragmatic approach, other than the idea that all of a company's income should be taxed once somewhere. Anti-hybrid rules, the global anti-base erosion proposal rules are a very good example of that. But we tend to forget that tax law is not only about problem-solving solutions. Tax law actually comprises values and principles that sometimes serve the purpose of shaping the law itself, protecting taxpayers from arbitrariness, from discrimination. So we should not forget, or we should not just simply fall in love with the idea of this extreme pragmatism. Just to give you an example, very brief, coming back again into the anti-hybrid rules. When you look about the interaction between the anti-hybrid rules with other specific anti-avoidance rules, in particular with interest limitation rule. The anti-hybrid rules, the primary response, basically, which denies a deduction in the country of the payer if there is no corresponding inclusion in the other country, is or has a similar effect than an interest limitation rule. An interest limitation rule also is a denial of the deductibility of interest. So when we ask the question, which rules should apply first, some people come very fast and say, well, of course, you apply first the anti-hybrid rule because it's a specific rule. So lex specialis over lex generalis, and that's the end of the story. Where is the difference? If we consider that both of them have the same economic effect, and we also consider the principle of ability to pay, interest limitation rules deny a deduction, but they give you the possibility to carry that denial for further years, because they try to ensure that if something happens, such as an inclusion of income in the next years, you can still use those interest that the deduction that they were denied. This is not granted in the case of a primary response, right? So the pure pragmatism brings us to simply forget about ability to pay and simply go ahead with this, again, problem-solving solutions. Excessive pragmatism, in my view, might prevent countries from developing really consistent tax provisions, increasing complexity, reducing coherence, and from a policy perspective. And there are plenty of cases that we can cite about, but I wanted to stop just in one example. In Europe, when it came the implementation of the BEPS measures through the Anti-Tax Avoidance Directive, and it came the discussion about precisely Action 2 on anti-hybrids. We had on one hand the OECD proposal with these coordinate rules, primary response, defensive rule, denied deduction, taxing what should be exempted. And on the other hand, the European Commission proposed simply to target the very core of the problematic of hybrid, which was the disparity in the characterization of entities or financial instruments. They said we should coordinate following the characterization in the source country. You solve the mismatch, and incidentally, you also ensure single taxation. Instead of following that path, and perhaps also because of the political pressure from the OECD, Europeans implemented in the end the OECD rules, which makes no sense at all, and again bring us to this excessive pragmatism that we see not only in the concept of full taxation, but also in sort of the leading voices that we have today in the international tax system. Finally, I think that pragmatism could ensure that income is taxed once somewhere, but it could rarely achieve the purpose, speaking about full taxation, of taxing where factors of productions are located. I'm not going to stop in the example now. We can discuss about it, but I try to give in the paper the example with the global anti-base erosion proposal, and how difficult is actually to ensure that. So that also brings us or leave us with the concept quite empty as well. The last part of the paper, and this perhaps for many of you might look a bit disassociated with the rest of what I try to say in the paper, but it's strictly related. And it has to be, and I want to explain why this part is also relevant, this idea of trying to question whether full taxation is indeed an international tax norm. And the relevance comes because author has suggested that full taxation, or they have referred that full taxation is an international norm. I know that perhaps that was not said in a strict sense, but still, if we think about the idea of the OECD-based erosion and profit shifting, reflecting and effectuating full taxation, we should ask ourselves whether that suggests that we are actually in front of a new international tax norm or not. And this can be approached in two ways. Trying to see the positive law that we have. So if there is an international norm that actually prohibits either double taxation or double non-taxation, which doesn't happen at all. Double taxation is generally or the relief of double taxation is generally a prerogative of countries that comes in a very agnostic way from the different tax policies of countries. Even at the level of treaties, you need to think that the relief of double taxation is more a mitigation of double taxation more than the elimination of double taxation. From an economic perspective, there are even countries that they don't care much about double taxation. Think about developing countries that they don't have much foreign income flows. They generally don't care about that part of the story. We have spoke a lot about double non-taxation, the exercise of sovereignties, but it's basically we go into the same issue. Now, when the question becomes interesting is actually when we ask ourselves whether if we don't have a norm, an international tax law that prohibits either double taxation or double non-taxation, whether we could be facing the formation of customary law. And here I wanted to stop for a while, because in the traditional study of custom, we have these two elements, right? A general practice of the states and the opinion juris, or the idea that countries follow this rule as law, in the belief that there is a sort of a sanction if they don't do it in that way. And I do recognize that there is in international tax law a very dynamic process of creation of different practices. We have well settled practices, and practices are in a constant process of being created at the same rate that they disappear. 30 years ago, we were not thinking about taxing a business without a physical presence in a country. Today is part of the debate that we have. So I don't deny that there can be well settled practices. Now the question is whether these practices are followed by countries because they think that they follow a particular law. And I have no answer for that, unfortunately. But I believe that there are two elements that they play against the formation of customary international tax law. One, it has to be with the fact that most of the international tax rules are ad hoc rules. So none of us can assure that what we recognize today as a well-settled practice will be as such in 10 more or 20 more years. Not even the basic concepts of residence and source. And on the other hand, I would say that the absence of a really centralized discourse in international tax law doesn't really help to that either. We don't have a centralized discourse in international tax law that might contribute positively to the formation, but it still is a question that I recognize that it is still very open, or it is too early to conclude it now. Let me just remark three things. So full taxation, despite its seductive rhetoric, is still conceptually inconsistent in my view, and might ultimately suggest that we need to tax somewhere no matter where, which is indeed quite risky. There is at the same time no evidence that full taxation might be an international tax norm, because there is no provision in international tax law that actually prohibits the outcome of something less than full taxation. And even though we might recognize perhaps some consistent international practice, I'm not so sure that achieved the element of opinion juris that it is necessary to form custom. So using the emperor's new clothes fable, I would say before we fall in love with the concept of full taxation, and we are so proud to dress with this new conceptual denomination. It is time perhaps to look at the mirror and see if we are not naked and we don't want to recognize it. So thank you very much for your attention, and I really look forward for debate now and the questions.